Good morning and welcome to this weekly market update from MRC Markets in London. Today is the 15th of January 2013. What we'll do today is go through technical analysis on the Euro dollar, cable, dollar Swiss, dollar yen and gold. Won't be making any trade calls recommendations on this video. You trade at your own risk. If you could please read our full disclaimer on our website www.mrcmarkets.com. Okay, then we haven't done a video in a while with the Christmas break, etc. I'll start off just by briefly looking at the weekly charts on all of these, and then go slightly down through the time frames just to give you a shorter term outlook, as these videos are weekly. We don't want to look too long term, but anyway, I'll just highlight what I'm focusing on these charts, and hopefully it'll be helpful for you. So this is the Euro dollar weekly chart. The one thing I really focus on is this 100-week moving average. You can see we're testing this now after a nice strong rally. We struggled to close above this 55-week moving average, and then we got a decent close and then a bounce off it. And then we're now testing the next target, which is the 100-week moving average, as you can see here, which is at around the 1.3382 level. So the weekly candlestick close is very key for this week. If it closes above, then the 200-week moving average will be the next target. And if it closes below, so if it's a nice reversal candle, then wouldn't be in the next sort of then we could start to see it range in between these two weekly moving averages. And the next thing I would focus on, actually to change the colour of these fibs, 2 seconds. I'll just leave the 50 and the 61.8 on there, so the two ones I'll mainly focus on. So yeah, the next, so I'll thicken up the line a bit as well, so it sticks out a bit clearer. Yeah, so the next, normally after a big rally, I wouldn't be surprised to see it test a 50% retracement, which is currently standing at the 1.3490 level. So I wouldn't be surprised to see that get tested, but it is struggling to get above this 100-week moving average. So no, some very key interesting, some key resistance zones there. The 100-week moving average only got 50%, and then the 200-week moving average there. So if it does pop above, then those two will be very difficult to break. So that'll be very interesting to see. That's the weekly chart anyway. Let's narrow it down to time frames. So what you've got here on the daily is a really solid trendline support here. I'll also change the colour of this trendline so you can see it a bit clearer. Yes, we've got a really decent trendline support there, which has been holding since July of 2012, so a very strong up move. The main reason being is that we really haven't had that much bearish Eurozone data. Well, not Eurozone data, just sort of any news. The main news out of the Eurozone has been Greece has been quite quiet and Spain's been quite quiet, and when we have that happening, the euro just grinds towards the upside. If there's no bad news, there's good news for the Eurozone, really, and that's what we're happening. That's what we're seeing here. We are seeing things stabilise a little bit. So if we do get a sell-off and you're looking for the bounce, a lot of traders will be buying off the trendline support, and also we've got this 55-day moving average, which is coinciding with this trendline support as well. The next thing I'd be looking for, really, any sort of another sort of dip buying opportunity. A lot of people will be trading the recent bounce off the trend line, and they'll be drawing a fib from the highs to the lows, and that low comes in at the 1.32 handle. So it's a nice sort of confidence there with the round number and the big Fibonacci level. So yeah, that's how I'm set up on my euro dollar charts. Really, it's just a kind of waiting game at the minute, because I'm not really interested whilst it's in this little choppy bull flag area. I'd either be looking for a decent retracement or see what happens at those bigger levels on that daily or on that weekly chart. Cable on the weekly. Two main things you have to keep in mind. We always draw these on here. It's just good to keep the sort of perspective in mind. We are in that triangular formation. In terms of the weekly, it's been shopping around for the last sort of few weeks, really. Nothing massively of interest. The only thing I'd be of interest would be if you draw a fib from the lows there of that trendline support to the highs. and wait for a decent sort of bounce off the 50%. You can see it also coincides with the previous support as well. Look at that to the pip there. So if we do come down further down, then I'd be looking for that 50%, although we do have the moving averages above it with the 100-week moving average there and the 55 and 200 there. If we flip it to a shorter term time frame, a lot of people will be focusing on this fib here from this recent dip to the highs there, and you can see this is currently playing out with that key bounce there off the 61.8 level. I'll just bring up that level for you in terms of the number. Yes, that 61.8 is coming in at one spot 60.34. We had that literally to the pip there. You can see that bounce, but we are struggling to get a nice pop towards the upside. We did have that daily candle there. I'm surprised it didn't start to rip up, but we have had sellers come back down, but the buyers are still coming in at this level. So it's an interesting sort of a support zone there in between the 50% and the 61.8. Buyers are still around, but the sellers are trying to bring it back down as well for a healthier sort of retracement. So yeah, that's how I'd keep my cable chart set up, to be honest with you. On the dollar Swiss on the weekly, it's all about the 100-week moving average acting as decent support of recent. It's struggling to get some decent momentum towards the upside. The next resistance level is this 55-week moving average here, which is around the 0.9373 level. But now it's all about getting a clear candlestick close above that 55-week moving average, in my opinion, if we're going to get any sort of bullish momentum. On the shorter term time frames, it's all about this key support level around here. I'll just change the colour of that for you. Yes, that key support, you can see there's multiple daily candlesticks been testing it and pierced the support level, but we keep on getting daily candlestick closes above it, and that's at the 0.9118 level. That's really been holding well. You can see we're trying to get some momentum towards the upside, but the 55-day moving average has been really capping this. It's very technical. That you can see the multiple. There's about 5 candlesticks there which have tested that level and capped it. So yeah, if we can get any more momentum towards the upside, then it's all about closing above that. And also, like with Eurodollar, we had the nice trendline support. Surprise, surprise, on dollar Swiss with the trendline resistance there, been correlating quite well. So yeah, see how that reacts. Really, if we do get a close, a daily candlestick close above these key resistances, then we could really start to fly towards the upside. But we'd be surprised to see it test again and come back down and test this support zone. So that's some interesting points in a minute. But there's a lot of traders looking for a nice breakout there. Dollar Swiss on the weekly, it really has just been flying up. We had the multiple weekly candlestick, bullish candlestick closes. Just really flying towards the upside. A lot of easing going on in Japan at the minute, which is weakening the Japanese yen. We've also had the 55-week moving average and the 100-week moving average cross towards the upside a lot. For the last time it crossed was up here back in 2008, so we've now crossed upwards here. So a lot of people will be seeing that as a buying signal. I'm not interested in anything really in terms of buying opportunities. The only buying opportunity I'd be tempted is to sort of if you drop from the lows to highs here, but we're a long way away from that. If you flip it to a shorter term time frame, it's just nothing really massively of interest, unless we get any sort of healthy retracement. You can look on the daily here. Yeah, it's just let's get rid of that bigger fib and draw a shorter fib. Yeah, so from the low on the daily chart here to the high, if it does start to retrace now, then that 50% was the first level I'd be looking at for. Actually, not the first. I'll be looking at for the 55-day moving average here. See how it reacts there. And if it gets below that, then you've got the 50% retracement, which stands at around 83.35. But we're still a long way away from that now. So nothing massively of interest. I think there's more interesting charts than dollar yen at the minute, to be honest with you. If we look at gold on the weekly, what do we have? The trendline support is getting a bit messy now, so we won't use that. We do have the new shorter trendline support though from around here, these spike lows to there, and also if we draw a fib from lows to highs there. So first of all, you can see the 100-week moving average here acting as really good support when now, in terms of moving averages, we're trying to get above this 55-week moving average to get any sort of decent momentum towards the upside. If we flip it to a shorter term time frame, and you can see the trend line support a bit clearer. We can bring it in a little bit. We'll just leave it there for now. But also, if you draw a fib from the lows to the highs here on this daily chart, you can see we've got a really nice spike at the 61.8 there. Acted as good support there. A lot of buyers came in, and we're trying to rotate towards the upside now. So the first key level resistance is the 55-week moving average here, which is at around 16.95, and then we've got the 100-week moving average, which is at 17.14. But it is looking like it is trying to rotate towards the upside now. But do be careful of these lower lows, that trend line resistance there. But no, interesting chart that gold. I wouldn't be surprised to see with all the QE going on at the minute. I wouldn't be surprised to see the dollar weaken and gold to continue towards the upside. But no, interesting charts there, to be honest with you. No, decent. Well, I mean, dollar yen's okay, but the others are nice and technical. There's still lots of opportunities out there. If we flip it to the Forex calendar, what we've got coming out for the rest of the week. Today is the Tuesday, so at 1:30 we have a raft of US data. We've got retail sales, PPI, and some mid-tier data there. We've got business inventories at 3 o'clock. On Wednesday, the main headline data, well, we do have a German 10-year bond auction actually. In terms of high impact news, we have 1:30 US time of the CPI data, so CPI month on month and core CPI. Expected both to increase actually. On Thursday, we have some overnight Aussie data. We'll have a look at the Aussie chart next week. We do have a Spanish 10-year bond auction on Thursday. That'll be key. That'll be key focus. That. And at 1:30 we have a lot more US news. We have building permits, weekly jobless claims. At 3 o'clock we have the Philly Fed manufacturing index expected at 7.1. And on Friday, to finish off the week, we have some UK retail sales data, and at 2:55 we have preliminary University of Michigan consumer sentiment, which is expected to increase actually to 75.1. Okay, that's all for today. I hope you enjoyed this video. Catch you next week. Have a great week trading.